In order to calculate the contribution margin income statement, we first need to understand what the contribution margin is. This is the formula used to calculate contribution margin, and that is revenue minus variable cost equals contribution margin. And what the contribution margin tells us is how much is left over to cover any fixed costs that we have. And then once we've covered our fixed cost, we either have net operating income if it's positive or net operating loss if it's negative. For the example here, we're going to look at Tobias Company's information for the month of August. We're given their revenue, their variable cost, and their fixed cost. We want to use this formula to calculate their contribution margin. Revenue of $125 minus the variable cost of $60,000 leaves us with a contribution margin of $65,000. Now let's calculate the contribution margin income statement. I've provided the formula here. Is one format that you can use just for a traditional contribution margin income statement. I'm just using total variable cost here. You could have several categories of variable cost that you could break down individually. If that's the case, you might have 3 or 4 different variable cost listings, but they would be subtracted from revenue to give you the contribution margin. And then you'll subtract your total fixed cost from that contribution margin to determine your net operating income if it's positive or net operating loss if it's negative. Now we'll just plug the numbers into the formula and do the math here. Sales revenue of $125,000 minus the total variable cost of $60,000 gives us the contribution margin of $65,000. From there, we will subtract our total fixed cost of $22,000, and that leaves Tobias Company with net operating income for the month of August of $43,000. We can even go a step further and determine a few ratios from the contribution margin income statement. And we're using that same information, but now we're just going to calculate some ratios. In the contribution margin income statement, sales revenue will be 100%, and any of the components will be a percentage of the sales revenue. For the variable cost ratio here, we take the total variable cost of $60,000 and divide it into the sales revenue, or divide it by the sales revenue. That gives you 0.48. You'll need to convert that to a percentage or move the decimal 2 places to the right, and that tells us that our variable cost ratio is 48%. For the contribution margin ratio, we'll take the contribution margin of $65,000, divide it by the sales revenue of $125,000. That gives you 0.52. Move the decimal 2 places to the right, and that is 52% is our contribution margin ratio. If you notice here, the contribution margin ratio plus the total variable cost ratio should equal 100%. If it doesn't, go back and check your numbers. There could be a rounding issue, but in this case, 52 plus 48 does equal 100%.